Welcome back to Trading Lessons from Legends. Every trader dreams of one thing: seeing the move before it happens, to know when a quiet stock is about to explode, to sense strength before the headlines arrive, to act while everyone else is still asleep. But almost no one can, because what they're looking for can't be seen. It has to be felt. Jesse Livermore could feel it. Long before the crash that made him a legend, he was already famous for one gift: spotting early breakouts that others thought were random noise. How did he do it? How did he read conviction hiding inside chaos and turn it into fortune after fortune? Today, we uncover his 5 hidden secrets, the same patterns that still appear in every chart, in every era, and in every human mind that touches the market. Don't blink, because if you miss even one, you might spend years chasing what Jesse Livermore saw in seconds. The subtle signs before the move, before the crash, before the fame, before the legend of the $100 million man. Jesse Livermore was just a quiet observer sitting in a corner of the bucket shops, watching, listening, recording. He didn't start by trying to predict the market. He started by trying to hear it. Every great move starts with silence. The biggest secret Livermore ever learned wasn't about price patterns, it was about patience patterns. He realized that before every breakout, before every panic, before every headline, there was a moment when the market grew strangely quiet. Prices moved, but emotion didn't. Volume shifted, but conviction didn't. He called it the whisper before the wave. To most traders, silence feels like nothing is happening. To Livermore, silence was the sound of pressure building. He wrote, "You don't make money when things happen. You make money when you understand why they're about to." In his early years, while others stared at price, he studied behavior. When the crowd relaxed, he paid attention. When noise faded, he leaned closer. He knew that the market's loudest moments aren't the most important. The quiet ones are. That's where the next move hides. The difference between watching and seeing. Most traders watch. Livermore saw. He noticed that just before a stock made a large move, its rhythm changed ever so slightly. Prices stopped reacting to bad news. Declines slowed down. Volume ticked up, not dramatically, just consistently. And the tape began to feel alive. He'd scribble small notes in his diary. Steel refuses to go lower. Sugar absorbing supply. Cotton heavy buying under the surface. These weren't signals. They were symptoms. To him, the market was a living organism. And breakouts were not explosions, they were exhalations. The moment energy released after too much compression. The psychology of compression. Every trader chases motion, but Livermore chased tension. He knew that a market only moves violently when human emotion reaches an extreme, when everyone believes the same thing, and yet prices refuse to follow belief. That contradiction, belief without confirmation, is where breakouts are born. He'd say, when the crowd expects, but the price rejects, something's coming. Imagine 1,925. The stock exchange is roaring. Men in suits shout across the floor. Livermore sits still, his pencil barely moving, watching a single stock print the same number again and again. No higher, no lower, just absorbing. That's tension. That's potential energy building, while everyone else gets bored. Modern traders see it too, but call it by other names. Accumulation, base formation, volatility squeeze. Livermore saw it first. He didn't use indicators. He used instinct, trained by observation. The quiet confidence of stillness. He was once asked, "How do you know when a stock is about to move?" He answered, "When I start to feel impatient." That's how deeply he understood market rhythm. His own boredom became a signal. He knew that impatience meant one of two things. Either he was wrong, or the move was close. Both required calm. He refused to act until the market itself confirmed his feeling, because acting early meant ego, and ego was expensive. He wrote, "Waiting is not wasting. It's charging interest on other people's impatience." That line belongs in every trader's journal today. The market's whisper. Livermore didn't believe in news. He believed in behavior. Before every breakout he ever caught, he saw one consistent behavior: a sudden lack of reaction to bad information. When bad headlines stopped hurting price, he knew strength was quietly taking control. He called it the invisible accumulation. It's the same today when you see a market shrug off bad news. When sellers can't push price lower anymore, that's not randomness. That's strong hands quietly buying what weak hands are throwing away. He said, "The market talks loudest when it says nothing at all." The tape is a living language. In the early 1900s, traders read newspapers. Livermore read tape, a narrow strip of paper printed with endless numbers, each one a heartbeat of collective emotion. He watched how numbers behaved together. A small uptick followed by a pause told him more than an entire column of analysis. The tape was honest, because it didn't care about logic, only reaction. He studied reaction like a linguist studies tone. When prices absorbed selling and refused to fall, that was optimism hiding in plain sight. When they fell too quickly on little volume, that was fear searching for validation. He wasn't decoding data. He was decoding human nature, seeing what the crowd can't feel. Livermore knew that every crowd has one fatal flaw. It can't feel what it doesn't believe. In bull markets, people stop feeling fear. In bear markets, they stop feeling hope. That blindness creates opportunity. He wrote, "I only need to be more sensitive than the crowd, not smarter." That's the essence of early breakout detection. Sensitivity over intelligence. He tuned himself like an instrument to detect shifts in emotion before shifts in price. That sensitivity made him millions. And it's still the one edge technology can't replicate. The first secret for modern traders. Secret Hasson. Learn to observe quiet strength. Most traders look for price action. Livermore looked for price reaction. When markets stop doing what they should, pay attention. When bad news fails to drop prices, when sellers vanish but volume stays, that's your whisper. Modern markets still behave like 1929, only the costumes have changed. He once said, "The market always tips its hand, but only to those patient enough to watch its sleeve." Translating to modern terms, today, that whisper might appear as tight consolidation with high volume, repeated rejections of new lows, a failed breakdown that reverses quickly, a sudden loss of volatility before expansion. But beneath every pattern is the same story. Strong hands buying from impatient ones. Livermore's secret was to spot conviction when it was still hidden. He didn't chase movement. He anticipated intention. That's what separates an operator from a trader. The art of anticipation without prediction. Livermore's power wasn't clairvoyance. It was readiness. He never said, "It will move." He said, "If it moves, I'll be ready." That small difference changes everything. It removes ego and replaces it with discipline. It turns trading from guessing to waiting. "You don't need to know the future," he wrote. "You just need to recognize when the present starts acting like it." He prepared his mind the way soldiers prepare their weapons. Clean, steady, and calm before battle. The scene before the storm. Picture it. The trading floor, late afternoon, the tape slowing, most traders heading home, and one man, Livermore, still there watching. He notices something. A stock that's been weak all month stops falling. No one cares, but he sees buyers quietly absorbing supply. He writes one word in his notebook: strength. A week later, it breaks out. He's already in. That's the difference between participation and perception. He didn't need confirmation from others. The tape had already spoken. Reflection for today's traders. Most traders today are data-rich and perception-poor. They have hundreds of indicators, but no awareness. They see everything and understand nothing. Livermore saw less and understood everything that mattered. His edge wasn't technology. It was attention. And attention is still the rarest currency in the world. Closing the first secret. Every great breakout, from 1929 to today, starts with a quiet contradiction. The market looks still, but feels alive. If you can sense that moment, you've already stepped ahead of the crowd. Livermore mastered that sense. He didn't need forecasts. He just listened. He called it the sound of readiness. That sound still exists hidden between candles, beneath headlines, inside hesitation. And those who hear it early own the beginning of every great move. The tape never lies. How Livermore used price and volume to see conviction before confirmation. Long before computers, before charts, before technical indicators and oscillators, there was only the tape, a narrow strip of paper printing an endless sequence of numbers. And while most traders saw chaos, Jesse Livermore saw conversation. To him, the tape wasn't data. It was language, the heartbeat of millions of minds pulsing through a machine, reading the pulse of the market. Every number, every tiny change, carried emotion. The panic of sellers, the hesitation of buyers, the greed of crowds. Livermore learned to read it like a doctor listens to a patient's pulse, not for the beats themselves, but for the irregularities. He said, "The tape tells the truth, because it has no reason to lie." Newspapers spun narratives. Brokers spun stories. But the tape was pure. It printed what people did, not what they said. He trusted the tape more than himself. The tape as a teacher. At age 15, Livermore worked in a bucket shop, a simulated trading room where customers bet on price movements without owning the stock. His job was to write prices from the ticker tape on a chalkboard. Every minute, new numbers poured in. Most people ignored the small movements between the big ones. Livermore didn't. He watched how prices changed, how they paused, hesitated, accelerated. He saw patterns of behavior, not patterns of charts. That's how he developed what we now call tape reading, the art of understanding the market's psychological momentum in real time, the difference between information and insight. In the early 1900s, everyone had access to the same tape, but only Livermore could see through it. Information was equal, interpretation was not. He realized that when prices moved without apparent reason, it wasn't randomness. It was accumulation or distribution by those who knew more. He wrote, "The tape reveals what insiders do before anyone knows why they do it." He wasn't chasing insider tips. He was watching insider footprints. Modern traders call it smart money flow. Livermore invented the concept before anyone had a name for it. Volume, the voice of conviction. Livermore didn't just read price, he listened to volume. Volume was the market's voice. It told him how loud conviction was behind each move. Rising prices on low volume? He called it hope without belief. Rising prices on increasing volume? Confidence building under the surface. Falling prices on low volume? Fear losing energy. Falling prices on surging volume? Panic, the end is near. He said, volume confirms what price suggests. One is motion, the other is emotion. He used both like two eyes forming depth perception. The subtle shift before every breakout. Livermore observed that before every strong breakout, volume started to rise without major price change. He called this quiet accumulation. It meant professionals were buying without moving the price, patiently absorbing supply from impatient sellers. He described it like pressure in a boiler. Each transaction added heat, and when the lid finally moved, it exploded upward. To him, the tape's rhythm changed before the price did, and he trained himself to feel that change like a heartbeat quickening before the race. The psychology of reactions. He believed the tape was not about direction, but reaction. It's never what the market does that matters, he said. It's what it refuses to do. If bad news hit and prices didn't fall, that was strength. If good news hit and prices didn't rise, that was weakness. He didn't need predictions, he needed evidence. Every reaction was data. Every hesitation was signal. That's why he never trusted rumors or opinions. He trusted behavior, seeing through manipulation. Wall Street in Livermore's era was full of manipulation. Operators pooling to move prices artificially, brokers publishing fake optimism, rumors running faster than truth. But Livermore didn't fear manipulation. He studied it. He knew manipulation left fingerprints on the tape, sudden bursts of volume, unconvincing rallies, nervous pauses. He once said, "The market can be rigged for a while, but not the tape, because tape records the rigging itself." When others cursed manipulation, he turned it into opportunity. The second secret, let price and volume tell the story. Secret #2, watch how the market absorbs pressure. Not what it says, what it endures. When price holds steady under selling pressure, it's strength. When it fails to rally under optimism, it's weakness. Modern translation, rising volume plus tight range is gelijk and silent strength. Declining volume plus fading rally equals quiet weakness. Breakouts are not explosions. They are results of emotional compression visible long before the move. How he used it in real trades. In the 1,910 seconds, Livermore watched Union Pacific stock flatten after a long downtrend. Volume started climbing slowly, steadily, while price refused to drop. He entered small. A week later, it broke out 20 points. He didn't celebrate. He noted in his journal, the tape turned heavy with buying, and the price stayed light. That's how he captured breakouts before newspapers noticed them. He wasn't chasing price. He was following pressure. The science behind the feeling. Livermore's genius was to combine intuition with discipline. He could feel a breakout coming, but he didn't act until the tape confirmed it. He called it scientific speculation. Today, we call it data-driven intuition, trusting instincts born from structured observation. He proved that instincts are reliable only when built on repetition. His entire success came from watching so long that the tape became a language in his subconscious. The modern equivalent. Modern traders have tools Livermore never dreamed of. Level 2 data, order flow, heat maps, algorithms, but the principle remains identical. Every modern platform still tells the same story. The push, the pause, the imbalance, the confirmation. The tape has changed form, not truth, because price and volume still reveal conviction before headlines do. And in every age, conviction moves price, not analysis. The mistake of today's traders. Today, traders drown in over-analysis. They chase indicators that only describe what already happened. Livermore's mind lived in the present tense. He understood that delay kills clarity. He didn't need a forecast. He needed focus. He'd say, every bar on a chart is the ghost of a moment you should have understood live. That's why he made money not from hindsight, but from real-time awareness. The emotional side of the tape. The tape was not mechanical to him. It was human. He'd say the tape sighed, shouted, whispered. He could feel panic spreading through price the way a musician feels tension in a chord. And like a musician, he didn't listen to individual notes. He listened to rhythm. That rhythm was emotional intelligence applied to finance. He could detect crowd anxiety rising before any analyst wrote a word. Modern traders can't replicate that by code, because empathy isn't programmable. It must be trained through patience. The mind of the observer. Reading the tape demanded stillness. If your mind moved faster than the market, you lost perception. He treated each trading session like meditation. Observe, record, breathe, react. He taught himself to love repetition. To him, boredom was progress, because boredom meant control. You must be quiet enough to hear the market speak. He said, if you are shouting with your own thoughts, you'll miss its words. Oat. That's why he outlasted louder men, because he could stay silent longer. The second secret summarized, listen to the tape, not the talk. The crowd describes the market. The tape defines it. Volume is truth whispered in numbers. Price is emotion disguised as math. Together, they show conviction before confirmation. That's Livermore's second great secret, and the one most traders never master, because they're too busy looking at what happened, instead of asking what's happening right now. Closing reflection. Livermore once said, everything important in the market happens before you're ready for it. That's why he trained his eyes to see readiness before motion. He didn't need prediction, he needed perception. The tape taught him that the market always knows before the crowd does. It whispers in numbers, in rhythm, in silence. And those who can translate that language never need anyone to tell them where the breakout is coming from. Timing the trigger. How Livermore waited for proof disguised as risk. Timing was Jesse Livermore's invisible weapon. He didn't guess where the market would go. He waited until the market told him it was already going there. Most traders crave prediction. Livermore mastered confirmation, because in the end, it's not about being early. It's about being aligned. The moment before momentum. He used to say, I don't trade opinions, I trade reactions. To Livermore, every breakout had a specific rhythm, an unrepeatable moment when hesitation turned into momentum. And he learned to feel that transition by watching one thing, how the market handled risk. He didn't define risk by price drops, but by how the market behaved when challenged. When sellers hit the tape and prices refused to fall, that was confirmation. That was proof disguised as danger. He called it the test of strength, the anatomy of the trigger. Livermore broke a breakout into 3 stages: 1. Anticipation, the quiet buildup, the base. 2. Testing, the fake moves, shakeouts, hesitation. San, confirmation, the moment the market shrugs off fear and expands effortlessly. He didn't buy the first move, he waited for the second, because the first is emotion, the second is conviction. He wrote, "The first move wakes the amateurs, the second one pays the professionals." Timing, for him, was not about prediction. It was about waiting for the test to fail. When fear couldn't break the price, he knew hope would. Why most traders miss the trigger? They act on what they feel is about to happen, instead of waiting to see what the market feels. Livermore believed that fear and greed are not opposite forces. They are sequential. Fear comes first, greed follows. The transition between them creates the breakout. But because traders feel both emotions in reverse, they act backward, buying after confirmation, selling after panic. He said, "The hardest part is not entering late. It's believing that waiting isn't wasting time." That patience was his timing edge, and his mental armor, the power of the second test. Livermore loved false breakouts. They were his favorite trap, not because they fooled him, but because they cleaned the field. He'd say, "A failed breakout is a market testing who's impatient." After the fake move, volume would dry up, price would compress again. Then and only then would he enter. Because when a market survives its own disappointment, it's ready to run. That was his trigger. Not the breakout itself, but the rebound from rejection. Modern traders call it a retest. Livermore called it the proof, the illusion of early. He despised the word early. To him, early meant wrong with pride. He once said, "There is no virtue in being early. The market doesn't pay you for first. It pays you for right." He'd rather miss the first 10% of a move than risk being trapped for the next 90%. He didn't need to buy the bottom. He needed to buy the beginning of inevitability. That's the difference between a gambler and an operator. The psychology of confirmation. Confirmation is not about charts. It's about ego management. When you wait for proof, you feel stupid while others act. But Livermore taught himself to enjoy that discomfort. He called it the cost of clarity. He'd sit for days, watching price nudge resistance, then pull back just enough to make doubters confident. He wanted the market to exhaust uncertainty first. "A good trade should make you uncomfortable when you enter," he said, "because comfort is a symptom of the crowd." That's how he trained his timing, by letting doubt ripen into proof, reading confirmation in behavior. Livermore didn't wait for patterns. He waited for reactions. His rules were simple but profound. Price must break through resistance and stay there. Volume must increase without panic. Pullbacks must be shallow and short-lived. Public disbelief must remain high. When all four aligned, he acted. It wasn't a system, it was a symphony of behavior. Every element needed to agree. He used to say, "I don't need to be the first in line. I just need to enter when the crowd starts moving in the same direction without knowing why." That's confirmation. That's timing. The third secret, proof before conviction. Secret #3. Wait for proof disguised as risk. The moment that feels most uncertain is usually the moment just before certainty emerges. That's why great traders move when others hesitate. They see that fear has lost its effect. They understand that the market, like people, reveals confidence, not in words, but in resistance to pressure. Livermore wrote, "I buy when the market refuses to go down." 5 words that summarize a lifetime of timing. The art of scaling in. He never entered all at once. He'd buy a testing position first, small enough to be wrong quietly. If the move confirmed, he'd add. He called it pyramiding on truth. Each layer was funded by previous profits, never by new hope. It's why he could build massive positions without panic. His risk never grew faster than his proof. Modern traders reverse that. They pyramid on hope and collapse on truth. Livermore's method turned patience into leverage. The discipline of missing out. He missed thousands of moves, and he celebrated it, because every move he skipped was proof his discipline worked. He once said, "The market will tempt you every day. The wise man says no more often than he says yes." He trained his will the way athletes train muscles, through repetition and restraint. Timing is not finding opportunity. It's refusing distraction. How he controlled time. Livermore knew he couldn't control price, but he could control time. He divided his trades into 3 temporal zones. 1. Observation time, watching without bias. 2. Decision time, preparing without rush. 3. Action time, executing without hesitation. Once in action time, he stopped thinking. He obeyed the tape like a soldier obeys a signal. He said, "Thinking must end the moment action begins." That separation between thought and execution made his timing mechanical but his intuition divine. The modern parallel. Today, traders have algorithms that detect breakout patterns automatically. But algorithms can't feel hesitation, and hesitation is where opportunity hides. Livermore's trigger lived in the micro-behavior of price. A slight delay, a fading of volatility, a moment of resistance that suddenly feels weightless. That's when he struck, not because he knew, but because the market had proven it. The timing paradox. The hardest truth in trading is that confirmation feels late, and yet it's right on time. Livermore embraced that paradox. He knew that if you feel safe entering, you're probably too late. If you feel anxious but the facts align, you're probably on time. "My job," he said, "is to enter right when my nerves scream stop." He treated discomfort as a compass, pointing him to timing no one else dared to trust. The third secret summarized: don't rush to be early. Wait to be undeniable. Livermore's genius was not speed. It was synchronization, knowing when the market's energy, behavior, and disbelief finally aligned into inevitability. He didn't find breakouts. He let them find him. That's timing. That's proof disguised as risk. Reflection for modern traders. Ask yourself, how many trades have you taken because you were afraid to miss them? How many times did you confuse urgency for opportunity? Livermore's timing method was an antidote to that disease of impatience. He knew that time itself is a trader's ally, because every extra second you wait is another second the market reveals truth. He didn't master markets. He mastered moments. Closing the lesson. When people asked Livermore how he always entered so perfectly, he smiled and said, "I never entered perfectly. I just entered honestly after the market convinced me." That humility, the willingness to let truth lead, is what made him legendary. He taught us that perfect timing isn't predicting the first move. It's joining the right one. The moment doubt turns into data, and in that small window between fear and proof, fortunes are made quietly, precisely, inevitably. Riding the breakout, the art of scaling and emotional control. Most traders think the hard part is entering a trade. Jesse Livermore knew the real test began after he was right. Because once the market agrees with you, you face a new enemy yourself. The psychology of winning. Livermore used to say, "The worst enemy of a good trade is a nervous trader." It's easy to be disciplined when losing. Losses demand respect, but profits seduce. They whisper, "Take me before I disappear." And that whisper has destroyed more fortunes than any crash. Livermore understood that the true purpose of patience was not just to enter well, but to endure success. He said, "The big money is made in the sitting, not in the thinking. But sitting is only easy when you're losing little. When you're winning big, sitting feels unbearable." That's where mastery begins. The discipline of doing nothing. When a breakout finally moved his way, Livermore's first instinct was stillness. He didn't celebrate. He didn't touch the position. He waited for confirmation of confirmation. He'd say, "If I'm right, the market will prove it again." He treated every breakout as a hypothesis that needed to be revalidated by reality, not emotion. That's why his profits compounded while others evaporated. He understood that great trades don't require effort, only endurance. Scaling the right way. Livermore's method was simple but revolutionary. Add when you're right, never when you're wrong. He called it pyramiding. Instead of entering large at once, he started small, waited for the move to prove itself, then added as momentum confirmed his thesis. Each addition was paid for by profits from earlier entries. That meant his risk never expanded faster than his accuracy. He wrote, "It is better to increase with the market's money than to increase with your ego." Most traders average down to fix mistakes. Livermore averaged up to reward discipline. That's how he turned small insights into empires, knowing when to stop adding, He knew every trend had a point where confidence turned into complacency. The tape slowed, volume flattened, energy dulled. He didn't wait for reversals to exit. He watched for loss of momentum long before price confirmed it. He said, "A market tells you when it's tired. The wise man lets it rest before it makes him." He treated profits like oxygen, useful, but invisible if you cling to it. He'd rather leave too early with clarity than stay too long with confusion. The mirror of ego. Livermore understood that success amplifies self-deception. Each prophet whispered, "You were right," and that voice could grow louder than the tape itself. He once wrote, "When I begin to think the market owes me money, I stop trading for the day." That was his emotional reset. The refusal to let self-importance distort perception, because a mind seeking validation can no longer hear truth. Turning momentum into awareness. He didn't see trends as waves to ride. He saw them as emotional phases to observe. Stage 1, disbelief. Stage 2, participation. Stage 3, euphoria. He aimed to enter during disbelief, expand during participation, and leave before euphoria. His mastery wasn't timing, it was emotional mapping. He'd say, "You don't trade price, you trade how people feel about it." That's how he could ride a move to its natural end, without falling in love with it. The fourth secret, let the market pay you to wait. Secret #4, ride strength, not excitement. Livermore's profits grew because he let market structure dictate his actions, not emotion or predictions. He knew that every strong breakout offers multiple retests, where traders sell too early. He used those moments to add, not because he was greedy, but because the market confirmed endurance. He'd laugh when people called him lucky. Luck, he said, is just patience with direction, emotional control during profits. He didn't check his account during major runs. He checked his discipline. He'd walk, read, detect. He knew excitement was a virus that spreads through profit. When price rose sharply, he asked one question: is this still the same trade I entered, or a new one created by my emotions? If it felt different, he stopped, adding, because emotional distortion marks the top of every move. That's how he survived both bull and bear markets, by distrusting comfort. The art of the exit. For Livermore, exiting was an act of grace, not desperation. He sold into strength, not weakness, because exits made in panic always came too late. He'd say, "When I can no longer read the tape, I let the market talk to someone else." That line holds more wisdom than any trading algorithm. It means letting go before clarity disappears, leaving with dignity instead of regret, scaling out with precision. Just as he scaled in gradually, he scaled out with symmetry. He'd sell portions on strength to reduce exposure, while keeping enough to benefit from continuation. Each partial sale was like testing the wind. If momentum stayed, he waited. If it faltered, he exited calmly. This method allowed him to capture the core of a move without being trapped by its ending. His process looked mechanical, but it was actually emotional awareness turned into math. The modern lesson. In the age of screens and dopamine, most traders sabotage their biggest wins by watching them too closely. Livermore's silence was his superpower. He didn't watch the profit and loss. He watched behavior, because price doesn't exist to make you rich. It exists to reveal truth, and truth doesn't need your attention every second. He mastered detachment long before psychology became a trading topic. The paradox of control. He often said, "I can't control the market. I can only control the man trading it." That paradox defined his life. He learned that real control isn't in orders, it's in emotions. He controlled greed by delegation, giving decisions to rules, not to moods. That's why he could ride waves most men drowned in. His discipline was a structure that protected him from the chaos of success, the quiet confidence of the ride. When reporters asked how it felt to make millions on a single move, Livermore smiled and said, "It feels exactly the same as making 1,000, because I don't feel it until it's over." That detachment wasn't apathy, it was self-preservation. He treated excitement as noise, because noise interrupts listening, and he lived by listening. The fourth secret summarized: add with confirmation, hold with humility, exit with clarity. That was his formula. and each step required emotional discipline greater than intellect. Most traders know when to enter. Few know how to stay. Livermore did both, because he turned patience into motion and silence into profit. That's the art of riding a breakout. Not chasing, but synchronizing. Not controlling, but cooperating. Reflection for modern traders. The modern trader has infinite distractions. Charts, alerts, profits flashing in real time. Livermore had only the tape and his own thoughts. That simplicity forced introspection. He couldn't hide from his emotions. He had to manage them or die by them. He did both, and through his contradictions, he became immortal. Every trader today faces the same truth. Your biggest test won't be finding entries. It will be staying human inside profit, closing the lesson. Livermore's greatest trades weren't flashes of genius. They were long conversations with conviction. He didn't need to chase, predict, or celebrate. He simply listened until the market said, "Now." And when it did, he stayed, longer than others could bear, because he knew that after all the noise and chaos, the market rewards one thing above all: the calm mind that rides clarity longer than emotion can last. The mastery of silence. Why great traders wait for clarity instead of noise. When the noise fades, the truth appears. That was Jesse Livermore's final philosophy, and perhaps his final mercy. He spent a lifetime surrounded by chaos. Markets rising and falling, crowds shouting, tickers screaming. And yet, his greatest edge wasn't in calculation. It was in silence, the sound of nothing. He once said, "Most men lose money because they cannot stand silence." When the market quiets, the ordinary trader grows restless. He searches for trades to feel alive. Livermore searched for silence to stay alive. He learned that silence is not the absence of opportunity. It's the space where clarity matures. He could sit in his office for hours. No trades, no calls, just the hum of the ticker in another room. That stillness was his competitive advantage. He waited until the market revealed itself, not when his emotions demanded action. The science of waiting. Livermore viewed silence as a filter. Every market cycle contained hundreds of false signals. Noise disguised as urgency. Headlines disguised as insight. He knew that time destroys deception. If a move was false, it would fade. If it was real, it would survive silence. He called this the test of truth. Modern traders rushed to catch every flicker. Livermore watched for endurance. He said, "The truth of a move is not in its beginning, but in its ability to continue. And continuation can only be measured in quiet." The psychology of stillness. Stillness was his meditation. He taught himself to replace impulse with observation. When he felt anxious to trade, he knew his awareness had shrunk. He would step away, walk the streets, read philosophy, and let his mind reset. He called it clearing the market inside my head, because the loudest market isn't outside. It's the one inside you. Every trader carries a private ticker. Fear, hope, greed, regret. The goal isn't to silence the market. It's to silence your own tape. When silence becomes signal. In 1925, before one of his largest winning streaks, Livermore went weeks without trading. The press mocked him. The great operator has gone quiet. He didn't care. He was waiting for disagreement to disappear. Explained, "I don't buy until both sides of the market grow tired of arguing." That fatigue, that equilibrium of disbelief, was his green light. When the noise stopped fighting itself, clarity emerged. Then, he acted quickly, decisively, silently. To outsiders, it looked like intuition. It was actually patience disguised as genius. The difference between calm and complacency. Livermore made a distinction few traders understand. Calm is awareness without emotion, while complacency is comfort without awareness. He said, "Silence must stay alert, or it becomes sleep." End of quote. He wasn't calm because he didn't care. He was calm because he cared correctly. His silence wasn't ignorance. It was discipline held at the edge of awareness. The power of absence. During his later years, Livermore grew obsessed with the philosophy of absence. He'd remove everything from his desk. No clutter, no distractions. He wrote, "Every unnecessary thought adds risk." He understood that information is like leverage. helpful until it overwhelms judgment. The less noise he allowed in his process, the more he could feel the market again. Modern traders confuse more screens with more control. Livermore discovered that clarity requires space. The less you chase, the more you notice. Silence as strategy. His strategy was built on one paradox. The less you trade, the more you make. He proved it repeatedly. The fortune in 1929, the massive campaigns of 1915 and 1917, all born from long silences followed by decisive bursts. He compared trading to hunting. The lion moves only when the prey is already dead. He didn't stalk opportunities. He waited until they walked into stillness. Then he struck once and rested. That rhythm kept him sane longer than most of his peers. The fifth secret: let silence confirm the truth. Secret #5. Silence is confirmation disguised as patience. You can't hear opportunity if you never stop talking to yourself. Livermore's mastery wasn't in speed. It was in absorption. He absorbed the market's rhythm until action became reflex. That's why he could wait months and trade minutes and make what others lost in years. He turned boredom into a skill. He used stillness as leverage, because silence amplifies conviction. The emotional cost of noise. Noise feeds the ego. Every notification, every chart refresh, is a small injection of validation. Livermore saw that addiction a century ago. He wrote, "A man who needs excitement in the market will never meet the market's silence with wisdom." He traded for truth, not adrenaline. That's why his process aged like philosophy, not strategy. He wasn't building systems. He was building awareness. The return to the mirror. If you step back far enough, Livermore's entire life forms a mirror. In his rise, he conquered emotion through silence. In his fall, he lost that silence to success. His tragedy wasn't that he traded badly. It was that he traded loudly, inside his own mind. He once admitted, "When I stopped listening, the market stopped talking to me." That's what every trader should fear. Not loss, but deafness. The modern application. In today's world, you can't escape noise, but you can design around it. Silence doesn't mean turning off your screens. It means turning off your need to react. Livermore's practice is timeless. Take fewer trades. Observe longer. Let clarity form naturally. Measure your calm, not your profit. These are not romantic ideas. They are risk management in psychological form, because uncertainty always punishes impatience first. The philosophy of enough. At the peak of his success, Livermore wrote a sentence few understood. Enough is the highest price a man can pay for peace. He meant that markets can only take from those who don't know when to stop listening. His silence wasn't passive. It was choice. And that choice defined his greatness more than any dollar figure ever could. The enduring wisdom. Livermore taught the market how to listen to itself. Every trader who studies psychology, volume, or price behavior is walking a path he mapped in solitude. He never claimed to be the best. He claimed to be the most aware. Awareness is silent because truth doesn't shout. It waits, like a signal under static, like a breakout beneath boredom, like wisdom behind loss. The final reflection. Livermore's life was a circle drawn in two halves. Noise the rise, silence the wisdom. His first fortune came from reading the tape. His second from reading himself. His final tragedy from forgetting both. The true legacy he left is not his wealth or his fall, but his realization that the market is a reflection of the human mind, and silence is the only mirror clear enough to see it. Closing the fifth secret. The market rewards awareness, not activity. The mind that waits hears truth before others hear price. Livermore's mastery of silence wasn't an escape from trading. It was trading in its purest form. He taught that the space between two trades is more valuable than the trades themselves, because in that space, you regain your edge, your clarity, your humanity. Epilogue, the timeless whisper. He used to write one line at the end of each journal. Listen when the market whispers. That whisper still exists today, in the flicker of volume before a breakout, in the hesitation before panic, in the silence between trades. It's the same whisper that told him when to enter, when to wait, and when to walk away. And maybe, just maybe, that whisper is speaking to you too.